All right, welcome to Crypto Chat Live, Dynamo's crypto show. I have next to me Sean Neal. I have him in the bottom corner of the screen. Let me pull him up. And me, I'm Joe Flocari. Hopefully we will see our gang on YouTube. Pun, I'm always waiting for Puncraft all the time. Very excited to see Pun, our biggest fan. So, all right, let's hit it quick. Let's go to the markets. Sean, the market's been down for a while now. You know, Ethereum, when it hit 40, 45, 46, everybody's like, it's going to 10. And it's on a fast path to 10 and, you know, around $2,000 a day. And Bitcoin, everything else has been down. What do you think? The volume's still been down. It's been a long time.
Yeah, I was one of the people that said, 5,000 next week and 10,000 by the end of the month or something like that. I was obviously very, very bullish and still am. I think you got a couple of issues going on. One is a lot of regulatory fear, people worried about crypto becoming illegal or something like that. All these crackdowns in the UK are definitely negatively impacting volume. People, can't use their bank accounts to buy crypto because the banks are limiting spending. So yeah, so you're going to see lower volume. Lower volume generally means weaker demand and depressed prices for a bit. So yep, I think it's a systemic correction. I don't see any fundamentals that are going to change anything, and there'll be a little bit more regulation. Binance will probably come around and get FCA registered, and everything will be back to normal. So, yeah.
How much longer do you think it's going to take? You watch a lot of these social media influencers. They keep on predicting the next one. It's going to go down to 25, go down to 20. Like, it's almost like they think they have some kind of master plan here that's going on.
Yeah, they have a master plan to get views and likes, right?
Yeah, that's about it.
Yeah, I don't, look, nobody can predict. I think, in the next 3 to 6 months, there's going to be a solidification of crypto in a number of areas. One being just as an institutional investment vehicle, already there with a lot of these ETFs that are getting into it, but also the real world use cases, right? Stuff actually being done in crypto besides finance. So I think, a lot of people are working on those things, and once that starts to come mainstream, maybe in the next 3 to 6 months, there'll be a turnaround in the fundamentals and valuations.
Are you surprised to see some of the crap coins still in it? They've Shiba and Doge and things like that, or there's just too much influence at this point?
Yeah, no, everybody's betting on the 100x, right? So no, it's gambling, right? It's pink sheets or penny stocks all over again. I'm not at all surprised. Yeah, I think you'll continue to see that.
Okay, well, let's go into the first story on our sheet for today. It's Uniswap. A lot of people are upset with what's going on with Uniswap. Let me find it on my board. Let me switch it up. Still getting used to these graphics a little bit. So a lot of people in Uniswap drama going on. On July 12th, the recently formed DeFi Education Fund, which a lot of people didn't know existed with Uniswap, they basically sold off about 500,000 unis, about $10 million of US dollars to raise money. And a lot of people are worried about concern of decentralization with Uniswap. Thoughts on this? Do you even understand this totally? What went on here?
Yeah, I don't get exactly what the mechanics are of what they did, and Uniswap is not a particularly transparent company, or I don't know. They call it a decentralized exchange, but it's really not. There are so many things out there that say they're decentralized, but when you actually peel back a couple layers of the onion, you realize that there's 2 or 3 puppet masters, and I think this is just shining a light on the same kind of thing. It's a lot like Ethereum being controlled by the Ethereum Foundation and Consensus, and Consensus hiring developers to work full time on Ethereum and driving all of the agenda. This kind of thing is no different, and frankly shouldn't be surprising when there's a lot of money big companies are going to come in and try to take it. So, what this education fund is, I don't understand what the details of that particular transaction are. And it's pretty difficult to get to those things. So yeah, again, and I go back to the whole thing of do your own research. It's so hard to do your own research unless you go and read the code, which is sometimes not millions of lines. It's not easy. So yeah, not surprising though.
How do you, as a creator of a coin, how do you keep it decentralized? A lot of people don't understand. They just hear it in the news, they hear it on YouTube, and they just assume it's decentralized.
Mm-hmm. It's about control, right? So who controls the code? Who controls the accounts? Who controls the coins? It's about spreading control around. And look, there's a couple of reasons you want it to be decentralized. Mainly, you want to avoid United States securities laws. There's this thing called the Howey test, which basically says that if you're running an enterprise and other people are giving you money and you control what the enterprise is doing, and then people are getting a return off that, that's a security. It doesn't really matter what form it takes. So you want to make sure that you're steering clear of the Howey test. But on top of that, I think there's just a fundamental value proposition of truly decentralized currency or any decentralized project that there is no one puppet master setting the agenda, but that everyone can contribute and all ideas are heard and respected and potentially acted upon.
Don't you think, though, with the countries adopting cryptocurrencies like Bitcoin and things like that, it's becoming centralized because the countries are really going to own the Bitcoin and the people aren't going to actually have the keys to the Bitcoin?
Yep.
So it's all becoming centralized.
If you don't have the private keys, you don't have the coins, right? So it's all hosted wallets. So those kinds of things, yeah, that's leading to centralization. I'm not sure how much centralization in terms of project governance. Bitcoin is a fairly decentralized governance project, unlike Ethereum, which is very highly centralized. And you see, not so much innovation. Everybody on the Bitcoin Foundation really doesn't want to make too many changes. The Taproot is probably the most recent thing that they've done. They're not looking to implement a virtual machine or do any of these decentralized finance things. So I think from a governance standpoint, Bitcoin is pretty well decentralized. But yeah, definitely the centralization of the coins and the mining of Bitcoin that's a pretty big concern.
How do you, with Dynamo then, with DyNAMOCOIN, how do you make sure that stays decentralized?
That's in the very foundation of the design, that the holders of the coin vote on what the agenda is for the project. So the foundation just does whatever the voters say. So the foundation has no ability to control the agenda or anything else. So once we do on-chain voting, it'll be completely in the hands of the coin holders.
Okay, let's go to the next story up on our sheet. It's maybe this is causing a little bit of the FUD and the market being down. Fed Chair Jerome Powell today said cryptocurrency stablecoins won't be needed once the U.S. has a digital currency. It goes on, and he was. What do you think when you hear this?
Yeah, I think politicians don't know too much about crypto, which should not be a surprise to anyone. Yeah, this is just, this is like crazy talk. Like I'm not even quite sure what he's trying to say, but he clearly doesn't understand anything about crypto. So, yeah, this is really crazy.
Yeah, because he's not really putting into account the decentralization because it's all going to be centralized.
Yeah.
But yeah, he his first statement was the first thing to go would be the stable coins. But
yeah, well, I don't really understand the complete function of stable coins. A lot of people have proposed that it's a way to do yield farming or these kinds of things. But for me, if I have $1, why would I put $1 and get one tether and then take that tether and buy Bitcoin unless I'm trying to hide my dollars? So it's a little bit of printing money, and we know that Tether is actually not backed by dollars, but more commercial paper and some more pretty liquid assets. But yeah, this is just crazy talk. Like, I don't even, like, it's unrelated. And if the government did come out with a currency, who would use it? Like, why it's the antithesis of crypto, right?
I mean, the average person is just going to get their paycheck right now. Everybody uses a credit card anyway. They're not using paper money anyway.
Yeah.
So in a way, it's just
You're
like
already there.
using,
You're
you know,
already
a digital currency at this point.
Yep. It's M2, right? M1 is cash. M2 is all this credit and everything else that's floating around. So instead of calling it M2, they'll call it dollar crypto or whatever. I don't know.
Mm-hmm. All right. And more scary news to keep the markets down and keep everybody scared and running away from crypto.
Mm-hmm.
The FBI warns digital currency exchanges and crypto owners of possible threats. They say they have credible threats that somebody is, or a group of people are going to try to start hacking some accounts.
Yeah. And, you know, just all the more reason to be decentralized, right? The fact that that there is a central authority with control that can be attacked is a huge issue. So yeah, this is just more about making it truly peer-to-peer, right? The fact that Coinbase has hosted wallets or Binance has hosted wallets, those are huge security threats. So this, you know, this says, you know what, put it in a paper wallet, take control of your own keys, get custody of your own crypto, so that instead of one single target, there's a million targets, right? You don't. It's very hard to hack, you know, a million different wallets in a systemic way. So yeah, not surprising. I mean, people are going for the keys of the kingdom.
Yeah, but you understand the average person that's getting into crypto, having these hard wallets is going to be too scary for them. And if they lose the keys and things like that, the majority of the people, you know, are always going to be, or at least I think. Do you really think at one point everybody will just have keys and not be on an exchange?
No, I don't think I'll ever get to that completely decentralized. But I think that there are tools that can be built by people who believe in truly decentralized crypto. Something like these Chrome extension wallets, because these Chrome extension wallets hold all of the keys locally. So the coins are on the chain, of course, right? The coins are never in a wallet, which is kind of counterintuitive. You think your coins would be in a wallet, but they're not, right? The keys are in the wallet. And so these Chrome extension wallets do generate the keys locally, and you know they can't be hacked unless that software has a vulnerability. And if you have lots of different wallets that are all written differently and distributed amongst lots and lots of people on lots of different platforms, that's a really hard target to make any real money. You know, you're not going to spend thousands of hours trying to hack somebody for a couple of Bitcoin, right? So, so those kinds of things will strengthen crypto over time. I hope, you know, that part becomes more decentralized.
Do you think the average person in 10 years, everybody like a Facebook account, they're just going to have their, you know, wallet, their crypto account wallet, just like a Facebook?
They have their ledger or their Trezor or something like that, their little USB stick that stores the keys in a hardware wallet. Yeah, you know, I could see that. Instead of your credit card, you have a USB stick, definitely.
Yeah, and you can see be like a Facebook account, and you'll have all your NFTs, and people will be able to see all the NFTs you have and things like that.
Yep.
New world coming. All right, what do we have next? I can't believe Puncraft is not with us yet.
He's at the bar.
Yes, he's at the bar.
After 5.
You gotta get Keith too. And yeah, with all this FUD and all the scary things they're trying to bring out, on the reverse end, we have Fidelity. Fidelity Digital to expand staff by 70% on strong crypto demand. And what's interesting about this is one of the factors that they said was why they decided to jump in was not from this year, where everybody would think, you know, when Ethereum hit 4,600 or whatever, and what Bitcoin was up in the 60s. It was actually from last year, the previous year, where they thought, okay, this popularity is here and this is a viable thing.
Yeah, I think you're going to see a lot of larger institutions trying to find crypto talent now, because there is just so much misinformation. And you know, if you're a Fidelity and you're going to give advice in the capacity of a fiduciary, and you give wrong information, just like that Morningstar woman that I was talking about earlier. You're a fiduciary, and if somebody makes an investment decision based on what you've told them, and it's technically incorrect, that's a liability. So so I think you're going to start to see a lot of these guys embracing more and more embracing technologists in those capacities. It makes a lot of sense.
Into that. Did you find? At least I found it interesting. I would have thought they were thinking about this year, but a lot of these companies are thinking 2 years in advance. You don't know what they're thinking about until 2 years before. And because you were in that business too, and you were in that world, do you think a lot of these larger companies were looking at it 5 and 6 years ago, ready to jump in?
Yeah, I don't think so. I think, in 2017 and 2018, everything was all about, people were just worried about Silk Road and money laundering, and, the fact that crypto just enabled criminals to transact more easily. So, I don't think there was any real visibility like the last peak, 2017, 2018. I don't think there was any interest from an institutional standpoint. I certainly didn't hear anything from the companies that I was talking to about doing blockchain for public use, or even private blockchains, those kinds of things. No, there was no visibility.
Oops, I just pulled it up a little early, but the next thing we're going to talk about is blockchain transaction fees and the speeds, or the transaction speeds, and the importance of them, because you don't go to like the grocery store and wait for a transaction to happen in 5 minutes. You want it instantly. And a lot of these blockchains are slow. And that's one of the biggest problems with blockchains right now. Yeah. But in DYNAMOCOIN right here, as we made this little graph, DYNAMOCOIN has one of the fastest transaction speeds, and you're not trying to be a financial coin, or, a coin transaction for financial things. But it just kind of go over this. I made this chart for us, but kind of go over, what we're looking at here.
So the key factors, it's pretty simple math, is, how big is a transaction in terms of storage, how big is your block size, and, how frequently do you emit a block? And then you can just kind of do the math from there as far as what the frequency of transactions that you can handle on your chain. We did run a test today, and we ran about 2,000 something transactions in a block for a sustained period of 3 blocks, which our block emission time is 15 seconds. So we're looking at about 8,000 transactions per minute. And if you do the math, it's 130. And compared to Ethereum, we're about 4 to 5 times as much, which makes exact sense because our block size is about 4 to 5 times as large, but our block emission time is about the same. They're 13 seconds, we're 15 seconds. So just kind of lines up, with the math. I don't see us as being a transactional currency where you're going to go to Wawa and buy a Coke with it, but the time to confirm and the ability to transact quickly, I think more on the NFT front will be super important for us. The fact that if you're going to do something like ride hailing, you don't want to wait 10 minutes for the driver to find out that you're looking for a ride. You want to wait 15 seconds or maybe 30 seconds if you don't make it in the first block. So that kind of highlights the ability of the chain to quickly transact, whether it's coins or NFTs. And I think more for our use cases, NFTs, that we're definitely up there in terms of the real-time transaction processing chains.
What are some of the key reasons of why some blockchains are slower and faster than others? Because like Ripple is super fast, the speed of Visa and things like that. But then you have Ethereum, which they put all this money into, and Cardano, which they spend 6 years before they've even done anything with it.
I think it's it's legacy for one thing. You develop a blockchain, work on the computers of the time that you're writing it. So you think about, well, what was the standard network and CPU and RAM 2012 or 2013? It's vastly different than what it is now. So they're going to be limited by that historical legacy kind of thing, unless of course they do a hard fork and upgrade, which is exactly what things like Bitcoin Cash were. Right? Bitcoin Cash said, hey, why limit to a 1 megabyte block size? It should be 10 megabytes, right? And so they upgraded, and yeah, they have a much higher throughput. Same thing with Ethereum Classic. You know, they could do more transactions per second as well. So it's partially about the time that it was developed in, and then it's partially about the level of centralization. You have things like Solana that can do, I don't know, 50,000 transactions a second, but it's incredibly centralized. So that's not really in the spirit of crypto. That's just like copying Visa, right, or something like that. You know, it's just another payment platform. Really, it doesn't really get you the benefit of a public blockchain that's decentralized. So levels of centralization will determine what your block speed is, and then just when it was developed and what the computers were in that time that could handle that amount of information.
Okay. Trying to think of anything else today. Let's go back to the markets. We've kind of flown through the stories. When you don't have Keith here, it's a little. We fly through just the both of us a little slower.
Have to fly, yeah.
Yeah. And our other guys are not here. Let me. I'm gonna pull up our crypto markets. You know what I'm saying? Usually later in the day, I'll sit there and watch it after dinner, and I'll watch it dip a little bit. Yeah, right around 2. I think we hit 1,800 today at some point. So it seems like it dips. It always gets Ethereum will get down to 1,800 and then just turn around and go back up.
So it's so range bound. It's incredible. 18 to 22. It hasn't done anything in months. It's crazy.
Yeah.
Yep. Ever since that high of 4 and then just tanked and stuck. Yep.
Somebody's making money off this because every day I'll see my phone will pop and it'll say 10% loss, 10% gain.
Yep.
Somebody's doing that 10% swing.
Trading the volume. Nope.
Yep.
It's good stuff.
All right.
Everything is range bound. I think Bitcoin and Ethereum and is all very highly range bound. It's a stagnation, right? Because that's what happens when you have low demand. So something's going to change to pop it again. It's going to be a breakout.
What do you think it's not going to happen this month? Probably going to be another 2 months, at least from everything I'm hearing, which, I mean, it's all guesswork anyway.
Sell in May and go away, right? That's the old stock adage. And that probably applies to crypto too. Everybody's on vacation. They're not sitting there hitting refresh on the browser every 15 seconds to see if they should trade or not. So volumes are down, it becomes range bound. Summer in the Western Hemisphere just really drives the capital markets and the vacation. Vacation season, kids are out of school. All those things I think are driving. In that respect, I think that equities and crypto will be correlated. So yeah, September, you could definitely see some.
You think it's September? September's your prediction, kind of?
Kids go back to school. Everybody starts paying attention. Probably all this crappy, probably by then Binance will have sorted their FCA issues. I think that'll be a turning point.
You think a lot of the social media influencers keep on saying we're going to see a $25,000 Bitcoin? Is that going to happen?
No, I don't think you get below 30. I don't think you ever get below 30.
Really?
Yeah, it's a psychological barrier. Yeah.
You see a lot of the, not to pick on influencers, but do you see a lot of, you think it's a lot just for clickbait and their own hopeful wishes that it hits 25 so they could buy it at 25? Or you think there's any technical analysis involved in that?
I don't think you could do technical analysis on crypto right now. It's gambling, right? It's just pure gambling. Because none of these projects have any sort of big commercial adoption behind them yet. You have this DeFi, but DeFi is like crypto squared. It's just doing crypto on crypto, right? So
Mm-hmm.
it's not like you're really doing something on crypto. So yeah, I think in the next few months, you're going to a lot of people are talking about what can I do with crypto aside from just trade other crypto or change coins to coins or do futures or swaps, right? Tell me something in the real world that I can do with crypto. And so as some of those things start to come out, then you can create a project valuation. You can say,
Mm-hmm.
okay, let's calculate how many rides there are and how many spread, what's the spread on a ride, and do a multiple and come up with a valuation of some kind. Right now it's
Do you want to talk about that with Dynamo, and what's your progress on trying to, I know you're trying to get a little bit into the rideshare world.
Yeah, so the first thing is finish this Chrome extension wallet. That will allow people to create ecosystems that are, what they call Web 3.0 enabled, meaning, click here to link to your wallet. Whatever the thing is, you can link to your wallet to that platform, and then let the platform spend on your behalf. So if you want a ride-hailing website, we can do that. We can create a decentralized web server where you can connect to any full node using some kind of client, connect your wallet in, and schedule a ride, and a driver will get some notification and come pick you up and take you where you need to go. You need to have that Chrome extension wallet first. Once that thing is done, then we're going to start to pump out some of the sample use cases. We'll build sort of a wireframe business, right? An idea about how could someone else do this? We don't want to do ride hailing ourselves, right? We want to enable people to build those kinds of platforms.
The average person, though, talk about that a little bit, is they wouldn't be going through Uber or Lyft. It'll be a separate transaction, just like having a plumber show up or anything else.
Mm-hmm.
Just it's a for sale by owner type thing, just transaction.
Yep. That's it. That's the idea, is peer to peer, right? So if, I read something today about a coin that's claims they're going to disintermediate Fiverr. It was a BEP20 token, so I don't know how they're going to do anything because they're stuck on the Binance chain, so they don't really have any functionality. But you could tell that people are starting to attack this space where they see, and it's so hypocritical, right? It's like things like Fiverr say, oh yeah, we help people. Well, no, they help themselves. I mean, they're not helping, they help buyers meet sellers, but it's not a peer-to-peer marketplace. It's still completely centralized. So I think you're going to start to see those kinds of things, right? Those things are going on in people's minds about how do we dethrone some of these peer-to-peer centralized markets.
How in a peer-to-peer marketplace, like if a Dynamo does that, if there's a dispute, how is that settled? At least if you're with Airbnb, you kind of complain to Airbnb to get your money back.
That's always what the role is of the intermediary right now, really, right? Is resolving disputes. If you think about eBay, Fiverr, Airbnb, right? Any one of those kind of things, I showed up and whatever. But the reality is, look, I did an Airbnb. It was a disaster, and they didn't help me at all. Once you rent it, you're it. I had to resolve it with the guy directly. And so I think, for the small number of disputes that happen, you're going to have some kind of potential, jurisdiction or whatever else where you can file an arbitration claim. There has to be some kind of moderation. You can go to a third party. But like the Airbnb I did, there was a guy in France. What am I going to sue the guy in France? Like, I was screwed, and Airbnb wasn't going to help me. So I think, there's this thinly veiled level of trust, so to speak. But in the end, I don't think there's much to any of those systems. Just like an eBay thing, right? If I'm a seller of an item and I ship them a shoe instead of a graphics card, and they open the box and they say, hey, I got a shoe, right? Like, unless I have a video of me putting it in the box and the video of me taking it to the post office and a video of me handing it to the post guy, I'm screwed. As the seller, I lose every time. There's no protection for sellers on eBay. The guy could just say, hey, I got a shoe. I didn't get a graphics card, and I'm screwed. So, these things are very thinly veiled promises of dispute resolution. Those things need to be worked out, right? They need to be codified. How do I engage in dispute? How do I engage a third party to go to dispute resolution? It's probably arbitration of some kind, but jurisdictions are very hard, right? How do you sue somebody in France? Super hard.
Yeah. And you said something about Web 3.0, and I'm trying to get a little better understanding also about it, but what is different than explain to people from the web now to the new web, the web of the future?
Well, I don't know what the web of the future is. My vision, which I haven't worked it all out yet in my own head. I'm still focusing mostly on doing the Chrome extension wallet. I need some quiet time to kind of go through what the design would be. But my vision of Web 3.0 is a decentralized web server, right? Because when I put up www.xyz.com, that right there, the fact that I've registered a domain and the fact that I've that I have to go to GoDaddy and put my name and all that stuff on that domain, that's completely centralized. And then the resolution of all that is completely centralized. And then the fact that name has to resolve to some number of servers that are hosted somewhere, all controlled by me, that's all centralized. So what I envision is that crypto full nodes can also be web servers, and that they can serve active pages with consensus. So if I go to a page and it's a login page, I can go to any page on any server and log in, and the results will be the same. And if I change my password, that'll go to all the other servers, and I can be able to hitting any full node server that's a web server, and it have the same experience. And if I put an item for sale, or I do some action with this ride hailing thing or whatever else, that all of that is resolved through consensus on a distributed web. It's a little challenging to get a whole system to agree on what a web page should look like, but I think that's my vision of the future.
That's what I was curious about, because I know there's the one organization that kind of, when you buy a domain name, there's one organization that kind of controls all that. Yep. How is that going to, in Web 3.0, that's what I'm trying to wrap my head around, understanding it.
Web 3.0, I think more, it's an amorphous concept, but I think that more refers to the ability to have money-enabled websites, let's call it, or crypto-enabled websites like MetaMask and those kind of guys, where you can, like PancakeSwap, you can click here and open your MetaMask wallet automatically. That's kind of the Web 3.0, I don't know, standard or moniker. What I'm talking about is probably something a little different, like distributed web, where it's not a domain name, right? It has to be on the chain. So it could be a domain system or a name system that's hosted on the chain. I think ENS is something like that. So we would have to develop something that says, I want to go to the ride hailing app one, ride hail one, whatever that is. And somehow that's stored on the chain and agreed to by all the full nodes, that there's some thing that you're going to get served up if you say, go to ride hail one. And then the user experience has to be the same for every user when they do that. Definitely complicated. I do think it is doable, but that's a completely different paradigm than opening a Chrome browser and typing in, xyz.com. Totally different.
I went down a whole different rabbit hole. I heard the 3.0 thing, and I've been reading so much about it and trying to wrap my head around it, because I don't think anybody really has, just like active use thing. Nobody has really their head around what it's going to be.
Yeah. Not yet. Yep.
We have a comment. What kind of hash rate will a shoe get for mining Dynamo? Yeah. Oh, it's not Puncraft.
We do have people using LG phones. Somebody ported the miner to an LG phone, but the hash rate was not exciting, and a Raspberry Pi, but the hash rate was not exciting on either of those. So,
but besides that, that's very exciting that somebody actually attempted to do that.
That was pretty cool.
And how difficult is that?
I have no idea. They didn't share the code, so I don't know. But cross compile. I mean, it is C code, so I guess it's sort of similar, but Android and Raspberry Pi Raspberry Pi is a Linux platform, so compiling it over there probably isn't too bad, but I don't know.
I assume, though, you've seen online where the people have the 10,000 phones on a wall all mining at the same time. I'm wondering if somebody's going to try to do that.
Yeah. It wouldn't be very energy efficient, I don't think.
Yeah.
Yeah.
Jeez. All right. Well, I don't think anything else. Yeah. Everything just hanging around the same area on the charts.
Yeah.
We went through our list. Keith isn't here. Puncraft is not here.
Yep.
And let's see. I always keep my phone up here. I'm watching the show as we're doing it. We have a few people watching.
It's Wednesday.
Huh?
It's Wednesday. What are you going to do?
Yeah. It's all right.
Yep.
We're starting early. One day everybody will be watching. All right. So that's about it. Yep. Anything else?
No, I'm good.
Think of? All right. Well, thank you guys. We will see you tomorrow. We will be back here.
Yep.
Oh, hold on.
Nope.
Somebody. Puncraft. But I am. Puncraft has showed. It's all going down. Pun, what's your market prediction? Keith is not here, but Pun is here. We'll stay on a minute to see if you have anything. Any questions? Jump into the show.
He predicts 2 beers.
2 beers at the bar.
Actually, I think he's a whiskey guy.
Do you know him? No. All right. Yep. It seems like nothing's going on. I'll let you get back to. Sean has a. He predicts August.
All right. So I said September. He says August. He's a little more.
All right.
Mystic.
All right. Well, we'll shut this stream down for now.
Yep.
And we've done a good 40 minutes. So we'll talk to you guys tomorrow. Please come back here tomorrow at the same time.